Hi, everyone. It's your host, Alec Crawford, for the AI Risk Reward podcast. And our very special guest today is Ann Barefoot, CEO and founder of Alliance for Innovative Regulation. Welcome, Joanne.
Thank you, Alex. It's lovely to be here.
Yeah, well, I've seen you in person a couple of times and now here on the podcast. So this is pretty awesome. The theme for our show today is regulation is way behind AI, which I think everybody already knows. But I think we're all pretty interested in your journey to how did you get to this spot where you started Alliance for Innovative Regulation?
So, uh, Alliance for Innovative Regulation coincidentally has the same acronym as your organization, AI
Yeah.
for Air, and it's a nonprofit working on the regulatory side of financial change driven by technology. And the journey is long ago, I was a bank regulator. I was deputy controller of the currency. And after that, I worked for the US Senate Banking Committee. And then I had a long career in consulting and spent decades really working on the regulatory side of trying to solve problems like consumer financial fairness, financial inclusion,
Hmm.
um, credit fairness, financial crime, also consumer financial health and financial protection. And along the way, became more and more evident to me that while we need regulations, they weren't exactly achieving the goals that they set out for. We don't really have
Mm.
the level that we might hope for of financial inclusion and consumers understanding and healthily managing their financial lives. We certainly don't have the success that we would like to have against financial crime. To the contrary, we're losing that
Hmm.
war massively.
Hmm.
We can talk maybe more about that. Um, and at the same time, I was looking at that trend of less than exciting achievement in the regulatory realm. I was looking at the emergence of new technology and realizing, starting almost 15 years ago, that most of the problems that consumers have in their financial lives could be greatly helped by uh, some ability to use some of these technologies.
Hmm.
And I actually took a 2 year sabbatical and went to Harvard and worked on some research as a senior fellow on how technology is changing consumer finance and how to regulate it. And I had kind of an epiphany there, which was that we'll probably never uh, capture all the benefits that are possible because we'll probably regulate it wrong. And when I say that, I don't mean to criticize my friends, the regulators. I again, was a regulator. I think highly of the regulators, but they're just not built to deal with change that's coming this fast, and that's this mold breaking. So I sort of appointed myself to try to solve that problem and really, frankly, was offered some financial backing to start a nonprofit around the ideas I was putting out. And here we are. So that was 6 years ago that we founded AIR.
Amazing, amazing. Yeah. So it is a funny coincidence that our companies have the same initials. Um, so that's pretty cool. You mentioned a book aligned with this to me. The future is faster than you think. So tell the audience about that book and pitch them to read it. Put it on their summer reading list.
Yeah. I read this book a few years ago, The Future is Faster Than You Think by Peter Diamandis. And the thing that I really took from, I mean, part of his message is the one I think is our theme today, which is tech is moving faster than people realize and faster than our institutions and laws and so on can keep up with. But the other thing that was really striking to me and that I put to use constantly was he argued very persuasively that the big leaps forward in technology happen when streams of innovation
Hmm.
that have been running in parallel with each other, developing in parallel, when they converge
Hmm.
and you mix them together. He used the example, I think, that stays in my mind of, people have been imagining uh, what we could call flying cars for as long as humans have been around, I guess, and certainly since the days of the Flintstone cartoon and so on. Why didn't it happen? He
Hmm.
argues that what we needed was also lightweight materials, GPS type navigation, a few other factors that you didn't have access to until recent years. And now suddenly we're seeing some flying taxis around the world, and who knows what's going to come next. But again, these streams of innovation, the people in them are usually operating in a silo and aren't aware of each other. But when they all come together at the same time, other people or those original innovators put them to use, and we all leap ahead. And I think we're in that moment now.
Yeah, I totally agree. I mean, I think even for me, and I've been involved in AI for a very, very long time, the amount of progress that's been made in the last couple of years has been pretty astounding.
Yeah.
We may not see artificial general intelligence for a while, but we're certainly going to see something that looks like it, right? And it may fool people into thinking, "Oh, wow, this is just as smart as a person." And obviously, being smart and having common sense are two different things. So,
Oh,
so that's going to be interesting. So what do you think is the biggest challenge around AI and, let's say, just banking in terms of consumer protection? Like what do you think is kind of missing there right now?
yeah. Well, I think that first of all, I think that generative AI in particular, and as you know, having been deeper in it longer than I, is a it's a general technology, not to be confused with artificial general intelligence, but it's a technology that's so useful for everything to everybody that it's just sweeping through our world like wildfire. Uh, and that's both a good thing and a bad thing. As we've been talking about, it's hard for us to keep up with it. I think for financial consumers, the first thing that pops into my mind is the risk around rising scams and fraud.
Yeah.
And these are skyrocketing. For those of your listeners that are financial companies and banks or regulators, I think we all need to be ready for a whole new generation of financial crime inventiveness in scams and frauds, and also in money laundering, which I like to remind people should
Mm,
not be thought of as white collar crime that's about moving money around. The crimes being paid for by money laundering, the crimes that become profitable because you can launder the profits are include human trafficking and just all of the worst things we can imagine. All of that with techniques like voice cloning and deep fakes, and just the ability to make sophisticated uh, scam attacks on people. Uh, I'm a believer, and I'd love to know if you agree or not, that we're kidding ourselves if we think we're going to get people to protect themselves from these very sophisticated types of fraud by through traditional consumer education and methods like that. I think people are going to have AI defenses for AI attacks. And I think we've got a whole body of work ahead of us on how to figure that out.
yeah.
Um, but go ahead and have another
I was
thought.
gonna, yeah, I agree with that. I think consumers, it's not just the consumers, it's the financial institutions themselves, right? So, give an example. I could call up a big bank, maybe once a month to do whatever. And every time they're trying to get me to enroll in their voice print security system, I'm like,
You're
there's no
telling me?
way I'm signing up for that. Like anybody could clone my voice in 10 seconds. I got hours and hours of audio and video out here for my podcast. So
Yeah,
if someone calls up and purports to be me, it could easily be AI and not me.
yeah, that's a great example. I do think on the upside, though, part of what we should get from the new technologies, and especially the generative AI, is just a tremendous boost in transparency of complex systems. So if I put my former regulator hat on, or my risk manager hat, if I were in a financial institution, the ability to track what's going on in an organization or in a complex system like finance,
Mhm.
uh, by having access to the tools that can gather all this information and analyze it instantly and put it into useful form for us, and to be able to query that instead of have to slog through, spreadsheets and so on, is just unbelievable. This is the future of financial oversight. And for the consumer herself, I think there is just a huge opportunity to uh, be treated more fairly because people have more data on you, because it'll be easier for people to get access to services if they have had trouble proving their identity, because maybe they're uh, young or newly in the country, or aspects like that. Um, we have a lot of financial exclusion that's just around failing fraud and AML, know your customer screens. And then similarly, to qualify for credit, we know we have tens of millions of people in the United States who would pay back a loan if they could get it, but they're not passing the traditional tests that we have for credit scores and credit history, because we built those in an earlier era when we had certain proxies for creditworthiness, and they were better than what came before them, but they're not complete and thorough as what we can begin building today.
Yeah, that totally makes sense. Yeah, a lot of it's around your credit history and how many U.S. credit cards you have and things like that.
Yeah,
And those obviously are uh, don't work so great if you just showed up from a different country.
yeah, or
Uh,
people who have lumpy income or expenses.
yeah,
It goes up and down. It's gig work and so on. Uh, it's going to be much easier to get an accurate picture of the creditworthiness of, again, millions of people.
yeah, and I totally agree in terms of look the power that AI will have to assist the regulators and the financial institutions themselves. I'll give you a great example, which is no one has time to comb through all the cash transactions in their 25 branch community bank, right? But you throw AI at that and it can discover structuring or suspicious cash deposits in about 10 seconds, right?
Absolutely.
Yeah,
Absolutely.
so tons and tons of amazing use cases there. So few people make it to where you are without a mentor or a guide or someone they really looked up to along the way. Is there anyone you want to call out there in terms of having helped you on your journey?
I probably would, and I know it sounds trite, but I probably would have to cite my parents. My mother was an extraordinary woman, way ahead of her time in terms of doing interesting things. She was a pilot and I mean, not professionally, but she flew in college and so on. Really an extraordinary woman. And my father was a fairly renowned engineer in rotor technology, first with helicopters and then with wind turbines. And I come from a long line of entrepreneurs. My great great uncle, maybe great great great, invented the player piano, and
Wow.
things like that. Run in my family multi generationally. So my parents, I think, inspired me and taught me. We could say to be brave and bold, and take some risk, because you don't want to be foolhardy, but if you don't take any risk, you don't get anywhere. So,
Yeah, that,
anyway,
that totally makes sense, which I think is what a lot of banks and credit unions are dealing with right now in terms of like, well, we want to use AI, like
yeah,
how much risk can we really take? And I think that takes us back to this concept of regulation is way behind AI, right? So as a bank or credit union decides to onboard AI, they kind of need to today at least to figure out how do we do this in a safe manner. It may not be 100% safe, but if you're not using AI as a financial institution 5 years from now and your competitors are, like, you're gonna have a problem, right? Those are the
yeah,
institutions that are gonna be acquired or, not do so great. So let's think a little bit about what types of principles should we think about for those financial institutions, and obviously that should align with principles based, regulation because look, the rules for using AI, if you're JP Morgan versus a two branch community bank, are just going to have to be different,
yeah,
right?
yeah. So it's a wonderful question. I think one of the key principles we could think of as borrowed from the medical realm, maybe kind of do no harm. Or if you compare it to something like medical regulation of innovation, uh, in that field, the regulatory stance is to ask whether something is safe and effective.
Hmm.
Whereas in our financial regulation, we mostly just ask, the regulators mostly just ask, is it safe?
Hmm.
And so the regulators don't have a mission or a concept of fostering good innovation, although actually some of the newer leaders now do. We work with pretty much all the US regulatory agencies, and there's definitely, I noticed we're recording this shortly after the new controller of the currency is coming into office, and the acting controller, Rodney Hood, is departing. And I noticed in his congratulatory letter to his successor Jonathan Gould, the other Friday, maybe, he said he hopes he'll foster innovation in the industry as one of the critical things to do. So the regulators are more and more focused on that. But the industry needs to realize the rules of the road are going to be unclear for a long time. And in that environment, what you need to do is, first of all, you can't freeze and wait for clarity because you'll be dead in the water if you do that. You need to move forward. You need to embrace technology. But you do need to ask yourself the question that in a more mature legal framework, the policymakers would be asking, which uh, is what you're trying to do safe? What could go wrong with it? Who could be hurt by it? If you're inventing, I know you have listeners who are fintechs and tech people. If you're inventing a technological innovation, a good question is to ask yourself whether it might do harm in the wrong hands. If you're collecting data and you're using it responsibly, might somebody else pick up on your technique and use it irresponsibly if there's not a legal barrier to doing so? Just ground yourself in. You can think of it as risk, you can think of it as ethics, but ultimately it will be good business to be avoiding doing things that will end up in a backlash and ultimately regulatory uh, difficulty. I also like to believe, and I'm not necessarily predicting it, because I tend to be an optimist, I think that we not only will be moving more toward principles-based regulation, as you alluded, but that we may be able to move in some of these areas to outcomes-based regulation, where, because we'll have more data to measure whether outcomes are satisfactory or not. And if we could do that, we might be able to have our financial regulators put less emphasis on how are you complying with our rules or how are you managing risks, very strong process orientation, and instead say, if your outcomes are acceptable, we don't care how you got there. Save yourself money if you can, as long as your outcome will be just as good. And that would be revolutionary in the financial regulatory space, and it could do a lot of good. It would force the policymakers to define what good is, which we don't usually do in financial regulation. But I think it could open up the space for a lot of innovation and reduce the compliance burdens on the industry, which are very significant and unevenly felt across large versus small institutions and banks versus fintechs and so on. I think we could reduce that and at the same time improve the outcomes for the public. That is what's behind the regulatory requirements in the first place.
Yeah, a good example of that would be obviously one outcome would be maintaining the privacy of your clients and your client
Yeah,
data, for example, right?
yeah,
Yeah, that's super, super important. And one of the concerns I have right now is it's just that there's just not a lot of knowledge. And we talked a little bit about, consumer education earlier, but I think it's also education on the regulatory side, education on the banking side, because other than a handful of people in tech, many of those people may not understand, oh, when I go into Perplexity and I put some client data in there, that the license agreement says, well, Perplexity owns that data now, right?
Yeah.
I literally was at a conference where there was a banker up there saying, "Oh, I put 100 sets of client data into Perplexity and did this and that," and I was just cringing, and someone raised their hand in the audience, not me, and said, "Oh, by the way, their license agreement says they own your data, right?" And the guy turned as white as a sheet, right? He just had no idea that he was kind of divulging confidential client data somewhere he should not.
This is part of why I've been so impressed by what you and your colleagues are doing, because you're something that you said to me when we talked recently, what that has really stayed top of mind for me was that if companies are telling their employees not to use Gen AI, they're using it anyway, and they're using an outside tool, and they might be putting your proprietary data or something else compromising in there. And so better to give them good tools to work with and
Yeah.
make sure they're in bounds on it. Yeah.
Yeah, no, I'm definitely seeing, not necessarily in banking, but in many other places, just kind of a rush to use AI. Yeah, we'll figure out the
Yeah.
safety and security stuff later, which I think is obviously not a great plan. But what about, let's turn to ethics a little bit. Lots of ethical questions around AI. But there are some people looking out in the future going, oh my gosh, we might have, 15% unemployment because AI is going to take everybody's jobs and things like that. I'm thinking more near term around just the ability, the huge amounts of data the companies have at this point, and the ability to use AI, maybe not in nefarious ways. So we're not talking about bad actors here. We're talking about, large financial institutions and tech companies and things like that. Like, what kind of ethical guardrails should those leaders be thinking about as they're deploying AI?
Yeah. I kind of go back to what we were talking about before, that we should be asking ourselves what harm could come from what we're doing, and how can we address that? Because there very often are choices you can make that will reduce the risk to someone of harm coming to them. I think it's hardest in areas where there are some tough trade offs, such as if you're trying to do a lot more. We're on the verge of tremendous expansion of stable coins and crypto activity. And there's tension between the anonymity of those vis-a-vis some of the things we need to do to protect people, and also there's risk in the transparency of the chain itself, in the fact that if you know what you're looking for, you can sometimes trace what's going on in ways that it's not desirable. So I just think having this mindset that's balancing, asking what the risks are, who could be hurt, but at the same time moving ahead and not just like waiting for it to magically clarify, because that's not coming. You talked earlier about the banks that don't adopt AI will be the ones that aren't going to be around, they'll be merged. I really agree with that. I've worked with community banks and credit unions for decades, and I used to be a great optimist about the sector because most of these institutions had a tremendous advantage for a long time locally in knowing their customers, giving better service, and so on. But that business model, I'm not saying it's gone, but it is insufficient today.
Yeah.
And I think a lot of institutions are relying on an aging customer base that maybe does still come into the branch, but maybe the Gen Z and millennials don't, and so on. I think people really have to have their eyes open and then figure out how can you use AI that will be responsive to the needs and preferences, and again, the safety and well-being of your customers. Just stay grounded in that.
Yeah, I have a funny story where one of the AI agents we provide is one that can review transcripts from bank call centers.
Mm.
And we were chatting with one of our bank clients. They said, "Hey, this is pretty funny. We went and did an analysis of what's the purpose of these calls, and we thought a third of them would be changing their password. Ended up being 10%, but literally 10% of the calls are just literally people calling up to chat." Because they're bored or lonely or whatever, so they call their community bank to just say hi. Like, wow,
So
that's
beautiful.
impressive.
Yeah, that is extremely impressive. That's extremely impressive. Could I say one other thing about community banks? And this goes back to what we were talking about at the beginning. One of the opportunities arising from all this for banks is that if if you agree with the thesis that if they had more data, they could qualify more people, both in the KYC process and also for credit, that can enable community banks to grow in place inside their geographic footprint. So many community banks today, for years now, have been trying to either expand into the nearby city with a branch or pick up a specialty financing focus that they are doing that they may or may not have enough expertise to do. But if you could just serve more of the people who live in your own community with good results on your risk metrics, everybody wins from that. And it just wasn't really doable in the past when you didn't have more and better data about what people are doing.
Yeah, great point. And along those lines, just talk a little bit about what AIR is working on this year, what your plans are.
Yeah. So we are extremely busy. The new administration, as we all know, has adopted a strategy of disrupting the government and trying to cause a real reset. And whether people support that or oppose it, one thing it is doing is creating a change environment. The agencies, as you know, the federal agencies are all greatly reducing their personnel and rethinking priorities and thinking about technology. So we're working with some of them. We have one project I don't want to talk about publicly, but it's pretty exciting working with one of the agencies. It'll be public soon, I think, just to help them, again, understand how to use technology better themselves and to better understand the technology in the financial markets that they're overseeing. We work with bank regulators, also, securities and other fields. We work around the world, and we've been doing a lot of work on the financial crime issues that we talked about before. So we just put on an event in Washington that we called AI Fraud Battlefront, and we had teams of people come together from banking, regulators, law enforcement, consumer advocates. The AARP was involved in it, for example. And we divided them into teams to create AI attacks and AI defenses. And it was unbelievably eye-opening. We're in the process of getting something up on our website about lessons learned from that. But that builds on some anti-fraud work that we recently did or late last year in West Africa. And we just did another project in Africa. So that's one area where it seems like everyone's agreed that we need to do better than we've been doing. And so we're doing a lot of work in that space. And again, a lot of work on the regulator's own capability. People aren't the topic of regulatory anything doesn't interest most people. It sounds boring. Some of us are interested in it. I've spent my career in that space, um, but I think for people in the financial industry and in the tech world, you're not ever going to get the full benefit of the potential innovation that we are living amidst here if you can't get the regulatory piece to keep up as well as possible. the regulators, they don't mean to do it, but they will be a drag on good things happening because they just aren't sure. And that makes it seem risky.
Yeah.
So we really work on that problem and
Yeah.
we invite the industry to help us.
Yeah. Well, I just offered our software at cost to one of the state regulators, and I'm happy
Good,
to make that offer to any regulator who's interested,
great.
if they want to learn more about AI and doing it safely. Look, last question before we head into our lightning round, which is really more of our advice section now, and that is, look, we've got a lot of leadership teams of community banks and credit unions out there. They're we're talking the 20 branches, 30 branches, not these behemoths. Like, what's your advice to them, given what you just said about regulation AI? Like, how should they think about this? How should they go about adopting AI? Where should they get started to be able to do it safely enough, right?
Yeah. I one insight that I'll share that might be obvious, but we see that it's not in a lot of places, is that as, say, a bank or a credit union is working on modernizing its own tech, it should bring its compliance people into that design work and not leave them to the side to later figure out how to plug it into their old compliance management models. Those models are so archaic. They just are. Again, it's not anybody's fault, but they're going to change for sure. And so it's important to have compliance at the table and to be listening to them. There's a growing cadre of compliance people, compliance officers in the country who actually know they need better tech, but they have trouble getting the voice and the resources. Sometimes they get overridden by their IT departments, so that conversation needs to be joined together, happening. They also obviously are all working, most all of them are working with their core IT vendor, which, if they're a small bank, your version of your IT may have a lot of limitations. You need to be working on that, moving into a cloud environment and so on. So it's really, a lot of it is just about connecting, getting people out of their silos, move toward an agile, to use the tech term, an agile way of working with the cross section of players who need to be involved on tackling these big transformational projects instead of the old, sequential waterfall method, and get people's ideas. I also always advise financial leaders to make sure they've got young people on the project. If you're digitally native, you just flat have an advantage over most of the people who aren't. And they've got ideas. My secret weapon in my life has often been that I listen to my kids better than a lot of my peers do. I actually, both my kids work in my field, so it's although I didn't try to make them do it, but fortunately they do. And I learn so much from them. They can see things that are hard to see if you've been in your bank for 30 years or whatever, and you're not exposed to the rest of it. So I think that's one of the secrets. Break the silos down, mix it up.
Yeah, I love that. Well, I'm always in favor of starting with risk and compliance and then figuring everything else out, as
Yeah.
opposed to the other way around. It's much harder to plug it in later. So that's a great point.
Yeah.
All right, well, we're going to shift to our lightning round. We'll mention different things, and you tell me if you think they're underrated or overrated, and maybe fairly rated, and maybe a sentence description wise. So we're going to kick it off with ethnic food in the DC area, underrated or overrated.
I'm going to say underrated, uh, because there's a stereotype left over from back when it was bad, but it's getting better all the time. But don't ask
Uh,
me to name a favorite restaurant.
that's okay. We won't do that. Using frequent flyer program miles, underrated or overrated?
Using them for travel is maybe underrated. I say that as someone who travels very, very intensively, and
Yeah.
without my frequent flyer miles, I'd be in trouble.
Uh, is there enough consumer education around bank fraud. So underrated or overrated. We'll call it consumer education around bank fraud or fraud.
So if I can break from the uh, lightning round
Yeah,
rules
yeah.
slightly, consumer education in finance is ineffective. We should do it. I'm all in favor of it, but it cannot possibly do the job. And what we think people should be thinking about is finding out, exploring how to get AI agents into the hands of consumers so they can do their financial management more easily and make financial choices more safely and
Yeah.
effectively.
I'm going to throw the word secure AI agents in there.
Safely,
Uh,
right?
visiting Santa Fe for vacation, underrated or overrated?
Oh gosh, underrated, especially if you haven't been there, then you're definitely underrating it. Yes, I have a home near there, and that's my happy place, New Mexico.
Going on hikes or long walks near the Washington, D.C. area, underrated or overrated?
Probably underrated, or maybe fairly rated, but it's a very walkable town, isn't it? It's just it's a beautiful town. It was laid out with great architectural design, mindfulness, to be just a lovely place full of green space. Yeah,
Cold brew coffee, underrated or overrated?
overrated.
Uh, taking a at least a year-long sabbatical in your career, underrated or overrated?
Underrated, or at least under exercised. When I've done several breaks in my career and learned that I came back not just refreshed and all of that, but depending what I did during the interim, I came back way ahead of where I would have been if I hadn't done so. I'm a great believer in not just staying on your silo in your silo and on your lane. Get out of it and do other things. So yeah. And when I went to Harvard, I cleared the decks. I did some consulting, but I left my bigger consulting firm and just didn't have any more of the standing meetings and any of that, and just had the chance to think and write and learn for 2 years, and it changed my career.
Amazing. Alternatives to FICO scores, underrated or overrated?
Underrated.
Yeah, totally agree with that. I think FICO is it's been around since how long? The 80s?
Yeah, I might be a little older than that.
Maybe even older.
Yeah,
Yeah.
yeah.
Yeah, got to be something better than that. Although I will say a lot of fintech companies, their pitch has been, "Hey, we've got something better than the FICO score," and then they're gone in 3 years. So
It's
it's
a
been
risk.
pretty durable.
Yeah, I agree. It's not an easy step, but when we get there, we'll have just way better credit underwriting.
Yeah. And the movie Mamma Mia, underrated or overrated?
Probably underrated. I love that movie. It's one of the few, maybe it's the only movie other than maybe holiday movies that I will sometimes watch again just to, you know, entertain myself. And I think what I like about it is I think I like stories about people who have sort of screwed up their lives and they're doing the best they can anyway, carrying on, and it works out for them. So that's a nice storyline.
Yeah, that's a great storyline. Anyway, Joanne, thank you for coming on the show. This has been Joanne Barefoot, CEO and founder of Alliance for Innovative Regulation. Great to have you on the show. That was fun, Joanne.
Thank you, Alec. I enjoyed it.